Good morning. It's Harvey Jackson from Producer Profit. Just going to go through just what's in the market there this morning. Uh, First off, I'm just going to touch on all the seasonalities and where we are, and just to remind us, so like we're here, and this is the expectation where the market's going. This is the canola chart, and here's your Minneapolis wheat for the last few years. It's basically going in that direction, a little bit higher, and then of course it drops off from the midsummer kind of area. So the blue is kind of highlighting the middle of the spring months. So here we are with oats, tends to go up. Uh, March oats as well. Here's your November soybeans. It's a little bit flat until we get into the spring because it's going to be dependent on acres and how much is going to get planted. All of that uncertainty kind of comes really to light in the spring and based on weather as well. So here's your corn, kind of goes a little bit flat and then gets a little bit of a spike into this planting season. India holds its rates on interest rates, and I've been talking about a lot of these different interest rate hikes in the past, and um, I thought I'd just highlight that one because they are a big economy, not the biggest, but a big economy as well. So I'm not certain if I'm going to keep showing this, but just looking at I look at this. I don't always include it, so I just look at the just the what sector is actually the biggest movers, and you can see grains has got a little bit of green in the screen here. Livestock actually has a bit of red, and that's all I'm showing here. And you can see it using this performance leaders, and you can see actually canola was number 3 in the performance leaders, along with coffee and whey powder as well. And then you can see who is the biggest losers, and it was natural gas, lumber, orange juice, and lithium. But I just look at it every day, right? So I thought maybe I'll just show. Here's the drought monitor came out yesterday, and I'm going to go big whoopie do because it's not going to be a big impactful at this time of year. No crops are getting grown. But here you can see that the overall drought and its percentages on where the crops are going to be grown areas. And again, no crop is grown. But you can see here on a soil moisture map, there is actually still some drought in some of these key areas. And Western Canada, U.S. still has some drought. And these are the areas that are probably the biggest concern. And yet you can see Australia, it looks like it's getting moisture, but you got to remember where is that growing region, as well. And it's got some drought, but it looks like it's catching more moisture than it normally does. So if there's a bullseye there for soybeans, and then you got Argentina there as well, growing areas still showing up with a fair bit of drought. Now, is that going to be impactful on the crop? That's the next question. So still showing a little bit of a little less moisture in that area, and that's the one that's probably the biggest concern to be paying attention to. So here's the markets as we see it right now. So you've got rapeseed actually trading down and canola trading up. The soybean oil is actually up. Palm oil is down. So we've got a mixed signals on all of those, and some of the wheats are just trading right around zero for very little action there. So canola, uh, I still would like to see if anybody wanted to get into these trades. It's still a good idea. We're above the 10-day moving average and above some of these retracement values. Your slow stochastic is actually saying it's a buy as well. So rapeseed, it's actually off today, or as far as a red versus green, it's down. But you can just see where we have climbed to as well. And then we look at where the peak has been. So we see the peak close to that $200 differential of rapeseed, and it's still well supporting canola, of course, at $180. Soybean oil kind of bouncing around, uh, trading above the 10-day moving average and looking like it. Not to say that it's absolute buy, but it's poking its head to say it's a buy signal on the slow stochastics as well. Palm oil, nice leg up here, day off by the look of it, as far as not trading up, but trading basically sideways. Your crude oil is trading in this wedge. Your diesel fuel is actually trading down again, and your soybeans are still trading basically sideways since October. Your Canadian dollar still got the slope down. We're going to get the jobs numbers out of the U.S. today, and we'll see what that actually does to whether that's going to be positive or negative to increase or yeah, decrease rates in the U.S. Because their economy is still going pretty strong. Let's get into the wheat. We're poking the head above of the downward trend. Uh, Looking like a possible buy here as well. So buying calls or going long futures, whether that's a thing to do here yet. It's by no means a strong bullish signal, but it could be the start of one. It's possible. Here's your differential of spring wheat to Kansas, and you can see that it laid down a little wee bit. I have a couple of growers that are actually playing that spread, so I'm just starting to pay attention to it a little bit more. Your Chicago wheat is down or is up, but it's just peaking above that 10-day moving average as well. Same with your hard red winter; it's starting to peak above that 10-day moving average, but not above that resistance line. Your milling wheat chopping around does have a leg up here, so we'll see if that can continue to hold and get to some higher values. Corn trading in this bit of a wedge. Looks like it's starting to get to closer to the top end of that wedge. I'd like to see it poke out and get above there, and even get back to this 50% retracement value. Cattle had a bad day. Cattle had a bit or one of the longer candles on the downside. So if you're in cattle, I would be looking at some sort of support there if you haven't done so already. That's all I have for you. Next week we do have the stats or the USDA, and we'll be updating some of those numbers that I would expect them to be updating the Canadian numbers and some of the European numbers on their next revision. So, and that could actually help the market. But we also know that the South America is still growing a big crop. So it might, that's talking out of both sides of my mouth, I guess, for that one. But you just never know what the market's going to do. But I think it's going to support the Canadian market if they're going to print some of the data that we've just put out as well. So that's all I have for you.